Sachem Capital Corporation, ticker symbol SACH, is a real estate finance company that trades on the NYSE American Exchange. The business is structured as a mortgage real estate investment trust, also known as a REIT. It is based in Connecticut and focuses on originating, funding, servicing, and managing short-term real estate loans. These loans are typically secured by first mortgages on residential and commercial properties. The typical use of funds is to acquire, renovate, improve, or develop property. These loans are often called bridge loans or hard money loans because they are issued quickly and carry higher interest rates than bank financing. The company must distribute at least 90% of its taxable income to shareholders in order to maintain REIT status. This means cash flow is regularly returned to investors. The REIT structure provides tax advantages, but also forces the company to keep payout levels high even when earnings are under stress. Dividends are central to the appeal of SACH. In June 2025, the board declared a common stock dividend of 5 cents per share and a preferred stock dividend of 48.4375 cents per preferred share for the Series A 7.75% cumulative redeemable preferred. Payments were scheduled for June 30, 2025. Earlier that year, the company raised $100 million by issuing senior secured notes due in 2030. The proceeds were used to refinance debt and expand lending capacity. In the first quarter of 2025, total revenue was about $11.4 million compared to $16.8 million the year prior. Revenue fell mainly due to a slowdown in loan originations and an increase in non-performing loans. Management described the quarter as stable but acknowledged that challenges remain. They highlighted preserved liquidity and the intent to grow the portfolio again when conditions improve. Market data shows about 47.34 million shares outstanding. The stock has traded between about 80 cents and $2.64 over the last year. Analysts have described the stock as high risk but with potential upside if real estate markets recover. One recent rating listed a $2 price target, which suggested nearly 87% upside from current levels. However, earnings have been negative and valuation ratios like price to earnings are not meaningful. Strengths of SACH include the appeal of high-yield payouts, its niche focus in short-term lending, and the successful ability to raise capital through debt markets. Weaknesses include exposure to borrower defaults, sensitivity to real estate values, pressure from high interest rates, and the small size of the company, which makes it more volatile. Dividend sustainability is a concern because payouts must continue even when earnings are weak, which may force reduction. Looking ahead, there are 3 scenarios to consider. In the base case where real estate markets remain stable, Sachem Capital could maintain loan originations, manage defaults, and continue dividends at the current level. In the bear case where property markets slump and defaults increase, the dividend could be cut and book value may shrink. In the bull case where demand for bridge financing rises and property values strengthen, Sachem could grow earnings and raise dividends. My meter rating is as follows. Income potential 7 out of 10 due to attractive yields. Risk 3 out of 10 due to high borrower default exposure and leverage. Sustainability 4 out of 10 since dividends may not hold if earnings remain weak. Execution and growth 5 out of 10 reflecting mixed results with new capital. Overall, my meter rating is 4.5 out of 10 rounded to 5. This is a speculative income play and not a safe core holding. If you have any videos you would like me to cover, say it in the comments below and I will break it down in plain English.